All right, what's up, my beautiful people? We've been talking a lot of trading strategies, trading and on all that with the live stream, but you know, with the markets kind of cooling down, the question is, what is the next thing? And you guys know how I am with, you know, the macro and all the stuff I'm looking at. And well, the trade talks have been something big. So I want to talk about some of the news that came out today and some developments over the weekend, because there is something unique going on and I want to explain it to you. Whereas I believe, and this is my opinion, and I think it's just because, you know, the access we have to China and how much we know about their economy and whatnot, and the people I've even spoke to in my relation with, you know, China and business, is that it seems as if quantitative easing or even QE2 for China is being unleashed now. So that's the first thing, but that's one of the things, but the first thing I'm going to talk about is this 60-day extension for the Trump deadlines, because that is coming here. The hard deadline is supposed to be March 1st. That's about 10, 11 days away. But now there's been more developments. We've seen how the market reacted, and I want to share that with you. Now, before I get into that, if you guys haven't done so, our live streaming channel, you could go anywhere here on the main channel. Click here. We're going to be live every day, market open and close. And we've talked about some of this today, so make sure you guys check it out there, or go to the recent video in the description, and even the description of this video will be right here. So getting to it, I want to show you guys, well, damn it, I already skipped it. Let's go over this first, and I'm going to show you guys the currency. I'm going to show you the basis and reasoning I have towards China, you know, saying this and coming up with this statement. But first, the Trump deadlines. Now, if you saw my last video, I made it about 2 weeks ago, and I said, you know, can China crash the stock market? And it was related to this and kind of the outcomes, and I outlined 3 possible scenarios, and one of them was kicking the can and delaying it, and now we are getting talks of that. It was first talked about a 90-day deadline, but now they're saying 60, where pretty much Trump even said today, not too long ago, I think about an hour ago, he said that he isn't opposed to, he said the hard deadline isn't some magical date. So they're already hinting at it, but however, they did reject the 90-day deadline, and now they're trying to do it in 2 ways. They're trying to, you know, and again, going through Bloomberg, here's the report on it, I'll post the link, but even as you scroll down, these are all the headlines today. The next one is U.S. presses China for stable yuan as trade talks progress. And literally, when that article dropped, this was something we were focusing on the live stream. And this is what I said in the last video, is watch the Chinese yuan. If this thing strengthens, that's positive. If it weakens, that's a negative. And really, as it strengthens, it's kind of showing you really where trade talks are standing. And, you know, it hasn't broken through one of these levels. If it gets here, you know, that'll be positive. And last time you saw China's, the yuan strengthen, we saw positive things in the market. So, you know, looking at this situation, pay attention to this. They are, and in my opinion, I feel like China is starting to strengthen the currency as a good faith effort to try to get the deadline pushed, because it's in their benefit. And that's why I'm saying QE2 as I share with you the next piece. But as you go through these articles, I'll give you one more. It says China has abandoned cybersecurity truce. There's things, and this is important because China wants to roll back the other tariffs in place, but America wants to reduce the trade deficit. So they have to negotiate pretty much a whole deal, but it seems like the possibility of kicking the can would be good. And, you know, this was something I talked about on stream, looking at the S&P 500. Let's see if I bring it up here, but this isn't, you know, if they kick the can, if they're able to put it to now April, May, June, that would be very calming for the market. Now, for you option traders, that might not be the best thing that you want, because you guys are seeing how it operates in this calm market. I'm going to go to June, and I've zoomed in on this before to show you guys, but this is how it was. Here was Brexit, and literally up until the election, the market didn't do anything after that, and that's what could happen. If they kick the can, we might get another month, either a little gap up or down, but it's going to hold there if it's all trading towards the news event. Now, there is stuff, there was bank reports and bank earnings that came out in Europe. China did dump some bank stocks that they own, some big China companies, so it seems though the market didn't care. The market has really been pushing towards this because this has a lot to do with it. And even then, the key phrase that was said by Chinese officials was that, I believe it's here towards the end, yes, the outcome of the U.S.-China high-level economic and trade negotiations may be related to future development and stability of the world economy. That's what the Chinese foreign minister said, because literally this is kind of now cooperation. You know, in my experience, and if, you know, go look throughout history, anytime systems or you've seen economic slowdowns, even the first East Asian financial crisis, any of the Bretton Woods issues after, you know, we got rid of the gold standard and all that, and fixing stuff, and World War II came up. And it's funny because that comes up to why I believe right now today China is injecting, you know, they're injecting more capital, and why it means QE. But it's cooperation. International cooperation is best, because as we see, when China slips, everybody kind of slips. You know, there's no such thing as being on a boat with somebody and saying, ha, your side of the ship is sinking, because in this case, if China hurts, we hurt. So it's kind of a mutually beneficial agreement. And I think China wants to be respectful. They're strengthening the yuan. They're trying to kick the can, and that's what they've done historically. You know, a lot of people have criticized China, and they're even skeptical of any trade deal, because China, kind of like North Korea with the nuclear program, they don't really hold their word. They say they'll do stuff, but the follow through is one thing. And again, that's a potential scenario for how this could all play out. But next, now, I'm going to show you guys, this is how you could get it. It was an article from the Financial Times that came out, and then there's another report. You know, this was January 15th, and now 1 month later, we got more data on Chinese credit. And if you guys, I'm showing you to Google this, because now I do get a lot of news from this website, and I see it because, well, pretty much if you wanted to go on Financial Times, you need to pay for a membership. But there's sites like Zero Hedge, and now I like Zero Hedge. I think it's a great website, but if you ever go to the website, it's kind of shitty. And realistically, I use this as leads, and I go from there. A lot of times it's very biased. It's one-sided. And honestly, this is offshoot. This is tinfoil news a lot of the time, and people make crazy claims. But if you focus on the data and don't go crazy, but then again, it's just like listening to me too at the same respect. So you guys know my policy with everything. I just like to get news from everywhere. So this is where you get the idea, and they start showing some of these facts. But even as you go through a lot of what's happened here right now with what China has been doing, this is where I'm starting to say QE2, because they did it in July, they did it in October, every time, but now they're hitting even more records, whereas now I think it was like a 13% year-over-year growth. But as you see, the new loan issuances, it's been the most since 1992 in a single month. And then when they aggregate it, pretty much these are levels of World War II type injection of capital now. And I think that's even weighted equivalently. China is pulling out the big guns, and I talked about this a few months ago, right before in the beginning of February with the Chinese New Year, simply because it was, you know, I said, could this be a Shanghai Accord Part 2? And this is what they did in August. And again, it had to do with cooperation with everybody. You know, in August 15, to recover from this, I think it was around August or October, they all agreed to support the Chinese currency and at least stabilize their currencies for the peg. And that's what China just announced today. They've input so much credit, and that's what they've been doing. And now we even see it globally. You know, some people have talked about the LIBOR, and, you know, that's the London International Bank rate or whatever. But how it's pretty much used is it's based upon, you know, it's rich people. That's who's taking advantage of LIBOR. I could get a portfolio loan and base it upon the LIBOR rate. With that going down, it's making it easy to leverage. But even on China's side, they're putting so much capital into the system. China just banned house cutting, meaning the prices of houses, you're not allowed to cut them if they're for sale. They said it was malicious. And they're implementing capital controls, and they're now throwing money into the system. They're stabilizing their currency. This has all the makings of quantitative easing. And, you know, we called this the Shanghai Accord. We could say it's stabilization. And this is where I think the disconnect between China and the United States and our cultures and what we understand about their economies comes into play. Because it seems as if now we are going to get kind of this capital boost, and now the money could support China. But now here's the issue. This is the second time it's happened. So if it happens twice, usually now if this time fails, what is going to happen? But again, I think they're just trying to buy time to survive until if there's more tariffs or not. If there is more tariffs, that'll be bad. If they could delay it, it will at least be able to give everybody a boost where, you know, look what the S&P did from there. And it was a mix of both sharp run up like we have now, calm, and then another quick little gap. But that took us all the way into 17 until we had to deal with all the other stuff. So really think about that. And wait, that was 2016. I'm an idiot. There you go. It's the same exact thing, because that's when the market was hitting lows. They injected capital, and then it changed. It went to the same thing. But you see it in many ways. This was the election, so this was the earlier thing I showed you. But the same concept still exists, and this is what I think is happening. So I'd keep my eye on it for now, and what I'm looking for to just see how this develops. You know, this is going to be interesting. And now this is where macro gets fun, because during October, especially if you've been following the channel and been following the news I'm following, a lot of you I might have been getting confused towards this month because data's coming out, but the market's not moving. This is how macro should be. This is where macro news now starts to take effect. It's now spotting the developments with this and seeing when it comes in. Can panic come back into the market? I firmly believe so. Some people believe that, okay, they're just trying to, you know, it took 9 months to get the market back stable. Last time this happened, you know, it took 1 month now. Fear is fear. And I think after that drop, and we're going to see what happened, but the trade now, going back to the beginning, the trade deadline and what happens is important. If they buy more time, it could buy a lot more time from the market. And, you know, it's going to be another couple months of seeing how things develop. But at the same time, it seems that global hands are stepping in, and you could see it. And, you know, this is why I say, you guys, if anybody has a Financial Times membership, you guys could go through and look at it, even through Bloomberg, and go through any of this stuff. You guys could even go through the news here. But there's a lot of things happening right now where it's, again, China.org, but that's a little bit older. But you could go through, you know, let me set it to recent. But pretty much a lot of stuff is coming out right now. But, or excuse me, I'm saying it's a lot of big things. It's the scale of proving governments involving. And again, like I said, the currency, when you start to see drastic moves and you see it stabilizing the strength, and again, a lot of times it'll just hold it there. It looks like it's getting pegged, like right here. That's how you know something's happening. So in general, my same thing, we've been watching this throughout the trading day. Just watch how the yuan progresses. Watch the other currencies. You know, we had issues with the banks today, but it's now seeing these moves, and now to profit off of the macro and to get a better understanding, expect for this stuff to take a little bit more time to develop, or now really it's going to be now the scale of news that comes out. The market has absorbed this, and now some of the same things aren't going to affect it. So you guys have to make sure you guys are going through and finding material news and seeing material changes. But if trade talks fall through, anything of that nature happens, we get any sort of negative developments out of China, more bankruptcy, more guidance cuts, which we've still been seeing. And that's something too. I think I'll wrap it up here to give you guys a good point to end out, even for the guys looking for info in the stock market. Watch out for guidance cuts. I think it's been some time now. We got past the earnings, but get prepared here. You know, with earnings seasons out, you know, they're not going to have to release any guidance updates. Usually they give themselves 30 days of time, as we've seen, but keep your eyes on that. And, you know, start now kind of getting a timeline and ready to start looking at these stuff, and, well, be easy from there. Don't get too jumpy, but at the same time, don't hesitate. I think we're entering another level. And as far as trading strategies, I'm going to talk about this, talk about selling premium and how to take advantage of these, or at least how I'm going to be going about it. So I love you guys. Hopefully this helped. Let me know your guys' feedback. If you have any information, any news you could contribute, if you want to correct me on anything, put it in the comments. I'd love to hear from you guys. So subscribe, just drop me some love, like, whatever it is. See you on stream tomorrow morning. Bye.